Good evening, traders. Good evening, traders. My name is Nathan. Today is Friday, the 18th day of September 2015. In my video today, I just want to do some wrap of what we have seen this particular week. And it's my hope that most of us guys are closing the week with a big smile on our face and looking forward for the weekend. And we have done what we could this particular week. Those of us who didn't trade this week, it's prudent that you didn't trade because we had some, we had a bit of market unexpected, not really unexpected, but we had some pretty much big news events lined up for this week. So straight up to my presentation today, and today's guys, I want to show you guys exactly what I do at my place or at my trading platform. This is my setup. And what I do typically is that I watch for the weekly cycles, guys. Weekly cycles, remember, I narrow down to the daily cycles, and my job is to spot the highs and the lows of the day, highs and the lows of the week. So all I want to show you guys is exactly what I talked about in my previous video, that 3 days of drop. See, guys, Monday, you can see the weekend, 2 double dotted lines marks the beginning of the week. You can see, guys, I hope let me show you guys. Okay, right, so you can see 2 double lines here represent a weekend, and this is on a Monday. So we are saying 3 days of drop, Monday, Tuesday, Wednesday, 3 days of drop, and we had our low of the day, low of the week set on Wednesday. And pretty much, if you're familiar with the market makers method, you'll be looking for reversals, especially on the Tuesday or the Wednesday. Depending on how the market begins or how the week begins, you will have the low of the week or the high of the week being set early in the week. Early in the week. Get it from me. Early in the week. Tuesday, Wednesday. We know the volumes on Monday are pretty much flat. Why? Because we have the traders in the Far East, China, Tokyo, Australia, so on and so forth. Those guys pretty much get the week going, and pretty much the guys from the far west, depending on where I am. Of course, I'm in Nairobi. Guys from Miami, Las Vegas, Mexico, Brazil. Those guys are pretty much on their weekend. So Monday is pretty much a boring day. Boring. Volumes are quite thin. Volumes are quite low. Nothing fancy to wait or to look forward to. Those of us who are located in the middle of the global map, of course, UK, France, Italy, Spain, Slovenia, Kenya, Egypt, South Africa, we know what to expect on Monday. We can pretty much trade the later part of the Monday session. So guys, we saw a flat Monday. All I'm saying is that the volumes on Monday were quite low or quite thin, and on Tuesday we expected some pickup in the volume, but it didn't. Why? Because the market was coy. The market was anticipating an interest rate decision later on in the week. So what happened here, guys, is simple. That on Wednesday we had some inflation report that was due or coming out from the US, pretty much the inflation report from the US at 3:30 Kenyan time. Of course, that's pretty much early in the London, late in the London session, early in the New York session on Wednesday, and we had some weak data. For those of us who understand fundamental analysis and who can actually deduce what news has implication, or what the news can tell us about something in the near future, knew that the Fed will probably be conservative. They will probably wait for the data before making a decision or of if to hike the rates or keep them on hold. And this was pretty much as a pace setter. As soon as we had the CPI data come in weaker, off what the economists expected, we saw the euro strengthen on the back of the weakening of the greenback, and we saw a nice pop higher, which went into the next day. And anybody who is a risk taker, of course, who probably likes playing around with the news, would fancy flipping this and placing a buy for some nice 122 pips. Why are we saying this? Because the tone was set on Wednesday. CPI data gives you a clue of what to expect on the rate decision, but I don't think we have many traders who did that anyway. But main aim of this video is to explain what we are seeing today. Many of us understand that the market makes moves that we do not understand, and this is purely what I talk about: dealer manipulation, market maker manipulation. And this is what they make you do. As you can see, guys, if I can zoom in a little bit, we can see on Friday, which is today, we start off with a period of accumulation, and early in the session they give us a false move, and the false move takes us up to one deviation of the standard, one deviation of the Asian range, and we can see the market giving us some nice churn bars here. If I can add my round number Indy, guys, I want you to see the confluence that is around this level. Confluence is my round number of 114.50. Get some little bit of churning, and the market was loading up. One deviation of the Asian range, and then they pop it up. They induce you to take a position to go long, because the Fed didn't hike the rates. So what do? You place a buy. Come on, guys. And those of us who place stops, pretty much more or less, like, you cannot lose more than 50 pips. Your stop will get hit. All I want to show you guys is this: we need to be very, very careful in the positions we take ahead of some big news, or even after some big news events. Don't trade like somebody who is just trying to chase the market. Think in line with the market makers. I mean, this was pretty much very, 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 very obvious. They will toss the market up, induce people to take long positions, and then bang, take the market away from them. I hope you guys can see this. How many of us were long the euro dollar? Today, 18th of September. Many of us. I don't want to give me an answer, but this is not a webinar. But obviously, I have had several calls of guys asking me what's going on, and this is what prompted me to make this video. I have access to delay information, and I can see that retail positions, long and short, and I can see 14,915 guys are buying the euro. Only 13,000 are selling the euro. It's obvious for me that obviously I will just tend to have a bias to the direction of the, I would go against the majority. So if many people are buying, I will be looking for short position. As you can see, my Indy flipped from my indicator. The position count flipped. Look at this. Rarely do you get these lines crossing. And when I see this, I would definitely know that there's something really happening. And what I'm talking about, guys, is exactly what many people are probably shying off from discussing on YouTube. This is manipulation taking place in the FX market, guys. And then when they come and take a big portion of your account. Because they will get you buying, they will hit your stops if you play stops, that is. If you don't play stops, man, you're in trouble. You keep hedging, you have a chance of surviving, of course, but you will be hoping that the market turns in your direction on Monday. We are heading into a weekend. We know what happens on the weekend. Gap risk. Guys, we need to be very, very, very sharp in how we trade, guys. You can see the stops are building up. You can see we have so many stops. We have majority of the stops on the lower side. And it's prudent for us to think in line with the sharks. The only way we can be consistent in our trading is to think in line with the market makers. Think about the patterns, think about the half pattern, think about everything that I discuss in my videos. And if you're sharp enough, you will get it going. It's been a pleasure hosting you guys today, and have a nice weekend, and be very happy always, man. Have a nice weekend. I will speak to you very, very soon. Cheers, guys. Speak soon.